What's up, traders? Richard here from Ninjacators. Watch as I show you one of the trades that I actually took very recently with some of our Fast Track members over here at Ninjacators. I've actually taken a short on the micro NASDAQ, again very recently, but I used a very specific strategy that I call the Morning Liquidity Run. It's also a strategy that I teach in a live trading environment, as well as traded with our members twice weekly. Right, so you can see on the chart here, I took two short here on the micro NASDAQ, got out with one contract, and I actually aggressively started trailing my second stop loss, or my remaining contract aggressively lower, and got stopped out. But as you can see, I got very near to this actual low prior to a very strong bounce back again to the upside. And what's really important to note here is that this specific setup occurs daily between 9 a.m. and 11 Eastern time. All right, so it's a very specific strategy that I follow. During that time window, we generally get reversals on the NASDAQ. You can also trade this on the ES or on crude oil. Now, I also have a few indicators that I use here, Ninjacators indicators, that helps me or assists me determine when I should take trades during that time window. Now, the first one here is actually our momentum divergence indicator. You can see these plots on the top here. It's actually coming from this indicator on the bottom here, and basically picks up bearish and bullish divergence. Now, you'll also see that I've actually like following the E-mini NASDAQ. And if, for example, the risk is too high on the E-mini NASDAQ, then I'll trade the micro NASDAQ, which is exactly what happened on this day. Right, so I follow the actual main contracts, again, either on the ES, NASDAQ or crude oil during the 9 to 11 Eastern time window. Right, so this is set to a 5-minute. You can see as price basically entered into that time window, it broke a slightly higher high above a previous high that was set during the morning hours. So I also want a level to be basically taken out. Then I want to start seeing momentum divergence. If I don't get momentum divergence on a 5-minute, I also have a 1-minute time frame loaded, which is exactly on the same date here that you see the NASDAQ on the 1-minute. Now on this time frame, I also had momentum divergence as price took out that level. Now if I didn't have momentum divergence there, then at the very least I want to see it on the 5 or the 1, vice versa. Sometimes you see it on both, as was the case on this day. The other thing very important that I want to see is confirmation that sellers are basically stepping, in this case, after a bullish run, a break of a level and a reversal. I want to start seeing sellers basically getting interested in shorting this market. And this is why we've got the volume delta histogram, one of my favorite indicators that I use, that helped me confirm that basically sellers were stepping into this market and basically going short, or the majority during the formation of each of these candles, as you can see by these red histograms here. Basically, it told me that a lot of sellers are getting in, and that's exactly what I'm looking for. All right, so once all of these conditions are in place, I like to go to my 1-minute time frame, and this is my trade execution time frame. Also, that's where I decide how big my risk would be if I do get into a trade. So after a break off that price level during my time window, momentum divergence, we're seeing sellers getting into this market. I then want to see price break a previous price structure point. And what do I mean by that? As price basically was making high highs, high lows into that high, we get this instance where price makes a break to the downside, breaking this previous uptrend price structure. This one wasn't that easy to see, but I did draw a line there. I like to color it a little bit of a different color just so it stands out. And that is another one of the conditions that I want to see appear before I try to get into a trade. And obviously all of this on that day with our members fell into place. And then very importantly, one final thing that needs to happen is that I want to see a fair value gap. And that is what I use to determine my trade entry location. Now on this day, a fair value gap occurred right after price broke that price structure point between this candle, the second candle, and this long range third candle, there was a gap between the low of the first candle and the high of the third candle, as you can see by this rectangle that I drew there. Price did move a little bit lower, but quite often price gravitates back to these fair value gaps, and quite often they'll act as support and resistance. In this case, I got short, or wanted to get short, and I like trading with 2 contracts. I want to get short with the Nasdaq or the E-mini, but by 2 minutes or so, I had enough time to decide what my risk is going to be. In this case, it's going to be over 100 ticks. So trading with 2 contracts would be about $1,000, and that risk for me was just way too big at that stage. So there was a setup closely looking at the E-mini, whether it's the Nasdaq or the ES or crude oil, and then if the risk is too big, then switch to the micro contract. You can see that same fair value gap was there at about 2 minutes, and on the 3rd minute price actually moved in there. You can see right at the low of that fair value gap, I had a resting limit, a sell limit order for 2 contracts. In this case, obviously moving over to the micro contracts, I did not have to take that much risk. All right. Now, granted, I actually wanted to sell a few more, but I just got short with 2. It was a bit of a scalp trade. Price reached my first target. I normally take a 1-to-1 on my first target, and as soon as that gets reached, I then trail my remaining stop to midway, and as price gets closer to the 1-to-2 ratio, I'll then aggressively start trailing my stop, which is exactly what happened here, and I got out on my second contract very close to the lows prior to the strong bounce back to the upside again. So not the biggest trader in the world, again, but I managed my risk properly. We are trading the micro contract. I did follow the actual setup with the right indicator conditions with my members, and everything just fell into place. And quite often when these conditions fall into place during that 9 to 11 a.m. Eastern Standard Time window, you get very high probabilities that you're going to get a reversal. And then it's all just a matter of looking for those fair value gaps, placing your orders, and then aggressively managing your trades as well. But anyway, a very nice setup that I, again, took with my members. If you're interested in finding out more about how I trade the strategy, I also have another strategy that I run with a strategy at the same time, then consider joining our Ninjacators Fast Track program. There will be a link down in the description, and I hope to see you on the inside. Until next time, take care and happy trading. Goodbye.